And it was their rules that helped me earn 30% of my deposit in 10 trades. This is just a unique strategy, one of the best in class. In this video, I will talk about the best working trading strategies that I use in my trading. I will show them on the examples of my real trades in my trading diary and tell you the most important things about each strategy. The first and my favorite trading strategy is the liquidity breakout to break a level. So this is when a coin forms a flat and also levels above or below, and before breaking the level it first removes liquidity. Now, first things first. The first thing I do is to go to the screener or to the exchange and sort coins by the top of growth or fall. This is to identify in which instruments there is money, a lot of money. And if there is money in a coin, it means that there is a participant, active market maker, who manages the price. If you don't know, a market maker is a market participant who supports the price. The most important thing in the strategy is to find an active coin with an active market maker and a clear chart. An active coin means that its volatility and rising or falling. Let's analyze two of my trades in more detail. So a fresh trade on an edge of the instrument. Okay, I guess by the time I finish the video, it will no longer be fresh. The coin grew by 60% in 20 hours and that moment was at the top of the growth. The first rule is satisfied. Now pay attention to the way the coin moves. Every time the price slows down, there is active buying. So someone's moving the price up. That's what we are looking for. The second rule is satisfied. Now let's look at the chart again. On the 1 minute time frame, during the growth period, there are three similar situations. The first situation is at the beginning of growth. Two levels are formed, then a flat and a low is formed, in which traders open a long and expect an upwards impulse. But to candlestick remove stop losses and growth starts at once. Now the second situation is the same. Two levels are formed, then a flat and low is formed, then stop losses are removed and then growth. In my view, everything was exactly the same. The same level is also removed liquidity behind the first break, and as the second case, the price is bought back and growth begins. The second rule is observed. Here, it's very important to open a trade only after a good reaction to the examples. In this strategy, it's necessary to understand that the market maker doesn't need someone to create additional volume, thus preventing the market maker to close positions and move the price. Experience in trading helps in this, and you will also need to look at the history of the coin as I just did. Now the second trade. The coin was in the top of the fall, namely it fell by almost 30% in one day. The first rule is observe an active coin. Pay attention to the chart clearly shows the strategies of the market maker. After an active growth or fall, a clear triangle is formed. And when liquidity accumulates behind these levels, it's removed with one candle, and then the movement downwards. I told you about in the previous video that such deals work well in the market now. Only during the day there were three such situations. The second and third rule is observed, namely a clear chart and active market maker. Let's summarize the strategy. The main sign that liquidity will be removed is two obvious formation. Now the market maker has changed, and all these figures from technical analysis don't work at all. Here is an example of technical analysis figures, and here are my trades. Here are more examples. In the description there are links to my favorite exchanges, BingX and Bybit. The second and simplest trading strategy is trading patterns and cyclical situation of coins. I would like to say at once that we will not talk about patterns from technical analysis, it's nonsense. We will talk about patterns that are formed in the course of market making strategies, since different market makers use different strategies. I'll analyze in detail on the examples on two deals. The first deal on Turbo. This is one of the trades from the last video, but this trade is a very clear example. Just look at the chart. Even a beginner will see a pattern here, namely after and before each rise a channel is formed, a channel with rising highs and lows, or a channel with falling highs and lows. There were 7 such situations in one day. It's a sin not to make money. I had 3 trades in this instrument during one day, here, here and here. I will show the example of the last deal, as this deal has the most beautiful channel. So after the growth, the price formed an ascending flat, that the highs were rising and the lows were rising, therefore a channel was formed. Then there is nothing complicated. As soon as the price reacted from the trend line, we open a deal. Absolutely nothing complicated. You just need to look at the chart to find patterns and make money. Also, in this trade, it was still possible to honor the breakdown of the level, but when I opened the trade, I immediately put take profit and left for business. And it's strange because there were strong levels here, and the breakout was as much as 4%. The second deal on Troy. In general, Troy coin is unique, very speculative coin, and by the way, there are many such coins on Bybit, because on Bybit, for example, there are more coins than on Bybit. There are a lot of listings on Bybit. And so let's move on to the deal. If you look at the chart on the hourly time frame, you can also see cyclical situation. If you don't look closely, it's some constant pumps and dumps. And if you look carefully, you can see that after each growth, there is a dump and then a slow downward movement and then a good breakout. By the way, here you can see the future, so to speak, and now I have the sum deal open in real time. Here is a screenshot. I also had a trade here, but I closed a very stupid trade here and under earned 10%. But as a fact, it works. So it's not difficult to make money on these trading strategies. So let's go to the trade again. After another dump, the price is being pushed down, and judging by the chart, it's done by the market maker. Our task is to make money together with him. In this situation, it was possible to enter the deal even earlier, because in all previous cases the price was going down, but I saw this situation too late. Then, as in previous cases, there was a good breakdown of the level, almost 4%. I managed to take 1% from the level breakdown. Let's summarize the result of the strategy. The most important thing here is to analyze the history of the coin and find 100% situation. I'll also give an example of the coin Liquidity. This coin formed a lot of triangles. This is on the 15-minute time frame. There were also many of them on the 1-minute time frame. Subscribe to the channel. I post videos every week, very useful video in which I always tell something new. The third trading strategy is scalping, collection volatility. In short, the essence of this trading strategy is that you open short deals in the trading terminal, focusing on short-term factors using volatility. For example, sizes or active buying or active selling. Position sizing refers to number of units an investor or trader invests in a particular security. Here is an example of a trading terminal that I use. It's a terminal from Vataga. Now I will briefly tell you the main points about the trading terminal. But if you want a full review of how to use the trading terminal, write in the comments. And so, in front of you is Vataga. On the left is Futures DOM, and on the right is the Spot DOM. It's conditionally divided into two parts. On the top asks, and on the bottom are the bids. On the left is a cluster chart. It's the same as a regular chart, but here it shows how many volumes are each part of the candlestick. On the bottom left are the clusters themselves. They show the total volume in the candlestick. It also shows the preponderance of buyers or sellers. These are working volumes. I would like to say at once that the DOM from the stock exchanges isn't suitable. It's nonsense. Normal DOM is 70% of information. The chart is the tip of the iceberg. To trade this strategy, you should use only highly volatility coins or in place. And so there's examples of the sum of my short trades. Now some of the trades I will explain. First trade, 1 second time frame. Such scalping trades should be executed on time frame up to 1 minute. Unfortunately, I didn't record the DOM, but in the next videos everything will be okay. During this time frame, the coin was pumped and there was high volatility. Also, in the DOM, you could notice that periodically the algorithm started to buy. The algorithm started to buy when the price reached the sizes. The chart shows that something was holding back the price. There were also many such cases before this. Here are examples of how first that size held back the price. Then the price rolled back, then they came back and broke through the size. That was the logic behind the trade. As a result, for only 4 seconds, I managed to earn 1% of the deposit. It's also worth considering that such trades should be leveraged. I usually enter scalper trades with free leverage, therefore even with 1% profit is good. The minus of the strategy is that you need to spend a lot of time at the computer, but the plus is that you can earn very well.